Welcome to our new series on artificial intelligence. Over the coming months, we'll explore the key challenges and opportunities within the rapidly evolving AI landscape. Today, we will focus on AI in the UK insurance market.
Hello, my name is Mark Pring and I'm here with my colleague Laura May Scott. We're partners in the insurance recovery and global commercial disputes groups at Reed Smith. We also talk about the current coverages that are potentially available for policyholders who use AI. If you like this webinar and want to hear more, do check out the Reed Smith Insured Success podcast, which has various episodes on the complex and potentially wonderful world of AI. So let's set the scene by kicking off looking at the different tech involved in AI.
Now, no doubt there will be other videos as part of this AI campaign that cover this in better detail, Mark. But in summary, there are three common types of AI systems. The first is highly capable, narrow AI systems. This type of AI is programmed to operate within a set of predefined functions to complete or address a specific problem. For example, facial recognition or speech recognition, voice assistance.
Or driving a car.
Highly capable, narrow AI systems are very intelligent at completing the specific task that they're programmed to do. We then have highly capable general purpose AI systems. I think this is the tech that we will be most familiar with. This category includes large language models, which serve as the basis for many generative AI systems. They're a prime example of highly capable general purpose AI, on par with human capabilities, but designed to create efficiencies.
So when we review documents in the context of disclosure or discovery?
Exactly that. The third type of AI is agentic AI systems. This tech is where autonomous AI agents function similarly to human employees. They can grasp nuanced contexts, set and pursue goals, reason through tasks, and adapt their actions based on changing conditions.
So in short, machines become self-aware and can surpass the capacity of human intelligence and ability?
You've hit the nail on the head, Mark. A world where we have a digital twin is not too far off.
What a thought. So how are insurers using AI in their processes today? In the UK insurance markets, insurers are already using artificial intelligence to assist with various aspects of their operations and processes. One that springs to the top of mind is underwriting. Underwriting is an obvious example where AI is already making and will increasingly make a huge impact. McKinsey, the consultants, reported during 2021 that by 2030, underwriting as we know it today will cease to exist for most personal and small business products across life covers and property and casualty insurance. Even in 2024, we can already see the developments made in the last 3 years since McKinsey's report. The process of underwriting is on its way to being reduced to a few seconds as it becomes increasingly automated. Machine and deep learning models are powered by internal and external data collected from carriers, reinsurers, product manufacturers, and product distributors. That data is then aggregated in a variety of repositories and data streams, and the AI system uses the information to make decisions regarding underwriting and pricing. Obviously, for more complex commercial risks requiring tailored insurance solutions, the human element, including our expertise in evaluating unique risks and building relationships among the parties, is likely to be more challenging to replicate purely with AI functionality.
And how do we see this use of AI impacting policyholders, Mark?
Well, from a commercial policyholder perspective, it's key to make sure that any product bundle produced by AI is sufficiently tailored to your company's risk profile and coverage needs. So does the automated insurance offering actually provide your business with the coverage you want for the risks you've identified as needing to be covered by insurance.
Totally. So risk is not quite being underwritten by a digital twin just yet then. Another area that we see AI being used in is claims processing. So right now, advanced algorithmic processes are handling the initial routing of claims to appropriate teams, affording in principle increased efficiencies and accuracy. And this, again, is particularly the case in relation to personal lines insurances. But even with larger commercial claims, through the use of AI, processing workflow speeds up processing times, mitigates fraud, and it hopefully will enhance the customer experience overall. We also see AI tech used in relation to property coverage. Data capture technologies such as drones are increasingly replacing traditional manual methods in respect of physical inspection of damage, for example, after a natural disaster. AI integration in drones allows them to quickly process huge amounts of data as situations unfold in real time, with reports back to insurers in a way that a human simply could not.
Understood. And how do you see this particular use of AI impacting policyholders, Laura May?
I think all in all, we would expect the use of AI in the claims handling process to speed things up, identify any issues, and otherwise get claims paid faster. I mean, it remains to be seen if AI will enhance the customer experience, because I know that is what self-checkout tills were supposed to do.
Indeed. So what about looking at this from a different angle for policyholders who want, let's say, AI cover? We've seen that there is limited bespoke cover available in the market, specifically in respect of AI-related risks. The policies are few and far between, and the insurance markets are still having to catch up. But what about existing policies that potentially cover AI risks? Policyholders should consider whether their existing policies would respond to losses arising from AI usage, even when this risk may not have been factored in during the underwriting stage. For example, physical loss or damage caused by AI risks would likely be covered by traditional property policies. Policyholders may also want to reassess their cyber policy wordings and how they correlate with other business lines, such as D&O liability and IP risks.
Yeah, and we have to be cautious because we know, particularly in relation to property insurance, that steps have been taken to introduce exclusions aimed at so-called silent cyber exposures. And the insurers may assert that those exclusions apply to AI-related risks. So policyholders should check their cover for exclusions and evaluate them carefully in light of the particular AI-related functions and applications that they deploy in their business. Similarly, insurers will no doubt begin to include questions on AI usage in risk questionnaires. We've seen that recently, and that's really to enable insurers to understand the extent of the reliance that the insured places on AI. So policyholders will need to be clear about what AI systems they are utilising and liaise closely with their brokers in relation to the identification of potential risks in respect of which they might need cover.
I completely agree. Many thanks, Laura May. So overall, the rapid evolution of AI technology will continue to present legal and regulatory challenges across several areas. In the insurance context, careful scrutiny of all current policy wordings, for example, media liability, cyber, and general liability insurance covers, is therefore recommended in order to locate any potential gaps in cover. Liaise early with your broker and your underwriters. It's key that they understand your business and how you're utilizing AI. There's much more to cover on this, so please look out for more from us on the implications of AI in the insurance context in the near future. In the meantime, many thanks to all of you for listening.
Thank you.